Hey, what's up everyone? This is Silver Slayer. Welcome back for another video. Today we're talking about silver's prices in 2020, why there is some potential in silver rising in this year coming up, and what to look forward to. Also, some key factors that are going to play into silver's price fluctuation, that whether it's good or bad, and I would love to hear your intake as well. Before we start this video, make sure to smash that thumbs up button. Make sure to like these videos, support silver channels out there. Also, subscribe if you already haven't. I make daily videos every single day at 4 p.m. Eastern Standard Time, so stay tuned for that. So, silver price forecast for 2020, silver's time to shine. Before we go into this article I found, all links will be in the description of this video, but I want to show you something interesting. So, this is a historical chart over the last 100 years of silver prices. As you guys can see, back in 1923, it's about $9.60 an ounce, and around 1980 it was up to $117 an ounce. We haven't seen those prices in a while, but we do know around 2011 it was almost $50. A lot of this had to do with September 11th happening, obviously Y2K, a lot of recession. In this chart, you can actually see the silver prices by president, by recession, by year, 10-year daily chart, by Fed chair. So if you're interested in, whether when George Bush was in chair or in office, what the prices were, you can do this. It's a really cool, interesting thing. I might make some type of video out of it. I don't know, but I'll just show it in this video just for this sake. But this is not the point of the video. But in 2020, silver does have a lot of potential, and this is because one of the main reasons 2020 is the next presidential election. Now, we know with all presidential elections, there is a lot of, especially nowadays with Trump in office, a lot of people are going to be, rioting, a lot of rallying, stuff like that. That causes an uproar in the economy. People fear that. Not saying to, not to over dramatize it or be over dramatic about it, but when this stuff does happen, people do get scared and they look for more secure ways to preserve their wealth or store their finances in a secure place that they trust. A lot of times people don't trust banks during this time, or whatever the case is, or even the government to go as far as that. So a lot of times these are key indicators. But this article I found dives a little deeper. It is an older article, but it still makes some really good points that I wanted to bring up with you guys. And I'm curious what you guys think about this article. So it's talking about silver's price forecast for 2020 shines, but upside depends on the business cycle. So my silver price forecast for 2020 is forging higher based on strong positive catalysts. I'll highlight 3 catalysts that are working in silver's favor and present an end destination forecast. The running of silver bulls is close at hand. So with these articles, these are all obviously predictions. We never know. These predictions or these articles can never be truly accurate because we don't know what's going to happen. And that's when I was talking about this the other day in one of my videos. I was like, we don't know what's going to happen in the economy for silver, what's going to, that's going to influence silver's prices. There's going to be huge factors that we cannot even think, we don't even fathom right now, that are going to be happening in the future that are going to seriously influence silver's price. So please keep that in mind when you are trying to stack or invest in the future in a more of a foregoing mind state, because there are factors that you don't even understand, but you can look at the basis of it. You can look at the fundamental factors of what it does, how it performs. Is it mining out the ground, the supply versus demand, the gold to silver ratio, whether the technological world we're advancing in still needs it as much as before, and it obviously does more, more than ever. So there are factors to look at that way, but there also is this speculation factor in the economy that we also have to almost assume is going to go smoothly, and if not, then who knows what would happen. But anyways, I'll dive into this article. And like I said, the link to this article will be in the description for the previous one as well. So he says, before I move forward with my reasoning for higher silver prices, let's get some of the not so positive news out of the way. Similar to my gold price forecast for the next 10 years, silver's near-term fundamentals are somewhat mixed. The economy is growing at what can best be described as a moderate pace. Obviously, it is a very bull market right now. But this moderate growth is much less than the gross domestic product, GPD trend growth in the previous business cycles, which reduces consumer demand somewhat. Tepid consumer demand usually results in lower industrial end-use demand, which works to cap prices. And this article goes into some extremely good points that I've never even thought about, and I'm really excited to share these with you. So he's saying like gold, silver, precious metal qualities have been subdued in recent times. Soaring equity prices and record low volatility have curtailed the wall of worry for now, but those dynamics should change over time. Another round of extreme monetary easing combined with geopolitical firestorm could make risk premiums a factor once again. So these are the three catalysts for silver's prices to rise, with the silver price per ounce hovering between $14 and $21 an ounce since July 2014. Silver silver is basically an underperforming asset. Like gold, silver can't seem to catch lasting momentum in either direction, which is true. For investors with short-term horizons, the price action is bound to frustrate. And that's a great point. For short-term people who are trying to just get in this market to make quick flips, that definitely would be frustrating. But obviously for us, we see this as just a discount time to purchase a lot more silver for cheaper. A lot of us got into silver when it was around $20 an ounce. So right now these prices are great deals. You know, we can get lots of ounces for very cheap, lowering our dollar per cost average. And that's something to take advantage of, especially knowing that, especially looking at the gold to silver ratio, these prices won't be lasting too much longer. There has to be some type of correction, especially with the ratio between 90 to 1. There's going to be some type of correction. But he goes into saying, that being said, I believe certain factors will work in silver's favor. Silver's price action is historically clinical. As such, timing and entries is critically important. I believe that the time is coming. However, there should be over allocated into individual portfolios. Here are the three reasons. Now, here are the reasons he's talking about. No growth in silver supplies. According to the U.S. Geological Survey, America only produced 470,000 ounces of silver in the first 5 months of 2017. A year ago, it was 482,000 ounces. Lower supplies aren't just an American anomaly. It's happening throughout the world. Total silver supply decreased by 32.6 million ounces in 2016, led by 11% drop in demand. Perhaps shockingly, Mexico registered the largest decline in production last year, followed by Australia and Argentina. Mexico is traditionally the largest silver producer in the world. So he's saying, I actually made a video talking about silver shortages in the supply. And I made a more recent video. This is from 2017, so I do have an updated version, and I share my perspective on this. I'm gonna kind of skim through just the pointers the factors he's pointing out. I'm not gonna really go into too much of the detail, because obviously we already know what's happened past these, and we know what the current prices are. And if you don't, you can check out my video I made about 2 weeks ago. But he's saying leading the charge to cut back production are big silver producers who have little incentive to find more supply. Typically, all sustaining costs in these sectors are around $10 to $14 an ounce. So many producers aren't making much money with silver prices stuck in the mid-teens. So he's saying, these places aren't even making money. So the only thing that will incentivize the exploration in a higher spot price, I predict this could happen at an event in a business cycle when prices in the industrial demand ramp up in conjunction with one another. So, that is going to give them more incentive to explore at a higher price. But, the new business cycle when prices in industrial demand ramp up in conjunction with one another. I think that with silver being at these prices, you definitely do have to check supply versus demand. Obviously low supply, high demand shoots the price up, but also with the industrial workers, if the miners aren't making enough digging it out the ground, or how much it's being used in the industry, that plays a huge role. You got to think silver isn't scrapped or isn't remelted at the rate gold is. A lot of people sell gold necklaces and gold coins back, but a lot of silver is lost, so they're still digging it out the ground at rapid demand, or at rapid supply, trying to fill the demands as well. And that's where he goes into technological demand right here. The winds of change regarding industrial silver demand are blowing. Industrial demand is falling in some traditionally strong areas like electronic appliances, miniaturizing, and photography. And this certainly has hampered the demand curve in a significant way. I've made also videos on this. He's kind of making points, but I've dug a little deeper. But he does say that the new industries are emerging that can ramp up demand at higher plateau. So whether the increase in the new tech can fully make up for losses in traditional industrial silver demand remains to have been seen. The photovoltaic industry, while not new, still offers plenty of mainstream adoption upside. And now he goes in to talk about the increasing investment demand. Retail investment demand has played a huge part in silver's run from $10 an ounce to $50 an ounce since the U.S. housing bubble. Back then, U.S. Mint was regularly selling out of Silver Eagle coins, and shipments and bullion dealers were delayed for weeks on end. And retail investors couldn't get enough, which, that was true. There was a lot more hype around it back then, especially when people saw it get to $50. People were making lots of money, almost like a cryptocurrency phase. The massive stimulus and balance sheet expansion undertaken by the Federal Reserve spooked investors and sent the U.S. dollar lower, so it even lowered the dollar per cost. Over time, however, investment demand wanted some of the U.S. economy gained traction, so that by 2016 silver coin metal fabrication fell by 9%, and obviously we saw it kind of go back down to that $20 range. um, but if investors were fearful for this fiscal condition of the Uncle Sam in 2008, wait until the next recession hits. The next one is likely to be global in nature, as most countries subsidizing consumer demand through low interest rates. Low interest rates are possible through central banks' bond purchases, which blows up their balance sheets. Low interest rates also causes sovereign nations to borrow more than fiscally responsible. Bottom line, expect silver investment demand to return with vengeance. The hemorrhaging silver supply will act to support prices. So, really interesting points. I'm curious what you guys think about this. A lot of the points he did make, he made some big points, but really didn't back it up with the context behind it, which I don't really like, because it can come off wrong to someone who's just reading this that doesn't understand some of the things that I've made videos about. That's why I also like making videos, to kind of dive a little deeper into certain subjects so you really know the backstory. But here's the part of the article where he talks about silver's price forecast for 2020. Silver's price predictions for 2020 have as much to do with timing as anything else, and that makes perfect sense. Timing is very important. If somehow the current U.S. business cycle doesn't slip into a recession and is still expanding by 2020, silver price forecast will be subdued. And obviously, this goes back to the presidential election in 2020. Depending on what happens, will also have a major influence on the price as well. However, if a recession takes hold, like I expect with the end of 2019, the sky's the limit for silver prices. Recession will trigger the Federal Reserve to act, creating another round of stimulus and monetary dilution. Stock markets will likely plunge, turning silver investments to the outflows into the inflows. So he's saying if stocks fall, people kind of steer away from that. They're going to go into physical assets like precious metals, physical bullion. There will likely be panic and concern about the viability of the U.S. dollar as America's deficit soars. And this is basically what I was mentioning before. As much as the economy wants to be strong and building the dollar back, when the dollar is, especially during a recession or times of panic in the economy, people do panic. They don't feel safe with the banks or the governments, central banks. They want to turn to physical assets like precious metals, where they can store their money, or at least preserve it until the economy or the financial part of the economy gains structure again. That makes perfect sense, and that is smart, but that's what most people do. So if something like this does happen, I would definitely at least say that there's a good chance that stocks are going to fall, maybe even cryptocurrency, investments like that, or assets like that. But with precious metals, gold, silver, maybe even ETFs, that's similar to stock. That could correlate with stocks, but investments like that will soar. So there could be a flip side. Whether the U.S. dollar declines right away is an open question. Sometimes the dollar strengthens during periods of crisis, like I just mentioned, but it could easily be abandoned at this time around. For the first time since Richard Nixon completely broke away from the gold standard, the dollar's reserve currency status is under threat. And that's a really interesting point as well. The gold standard was obviously when our fiat currency was backed by actual gold, and Walking Liberty actually had 90% silver in it, making it, it was actually backed by real silver. So if you had 50 cents, you have 50 cent or 50 cent half dollar that had 50 cents of actual silver in it. So our monetary system was backed by something with real value. But now, once the gold standard is taken away, it's all basically a promise. It's being pumped, impregnated into the world, causing hyperinflation. That's also why we're $24 trillion in debt as well. So this all intertwines with each other. So there's so many factors that play into this. It's extremely hard to try to predict anything. We definitely have to just see. But this article does go on to even farther points and things that he goes into some of the charts and from post recession, all that. So you guys can check it out if you want. I thought it was pretty interesting. He made some interesting points. But I'm definitely I don't want this video to be too long, so I'm going to wrap it up here. Make sure to like this video, subscribe if you already haven't. I hope you guys did enjoy this content. I tried to share this information with you guys, spark some some good debate and some good topics to talk about on my channel. I try to use my channel as a platform for all of us to engage and just pick each other's brains. But anyways, this was Silver Slayer. I hope you guys enjoyed this video. Make sure to like if you didn't. Stay tuned for more videos like this. Peace.